Having a victim mentality is doing more harm than good. Today, I'm going to react to a video. This is my first crossover video between my US and my UK audience. I'm uniquely prepared to have this conversation as someone that has worked in finance for over 30 years, both in the US and in the UK. I've lived in both countries, in several states in the US and several cities in the UK. This victimhood thing is not unique to Black people, but it certainly is holding us back.
Time of how my mortgage increased by 120% and how easy it is for Black folks to lose their homes in America. Now, with that being said, I'm going to be completely transparent. I'm going to give y'all all the numbers. I'm just going to let you know because ain't no point in hiding. I don't gatekeep, but none of that. Okay, so the beginning of this month, I wake up and
So before we get into this, what I'm going to do today is I'm going to react to this video. I'm going to share some personal experiences. Let me tell you the context and make sure you watch until the end. Make sure you like, subscribe, and leave comments if you think that I'm missing the point. The context of this is I have worked in the US and in the UK in finance for over 30 years. That's not to say that I have all the answers, and I'm not going to present this as if I do have all the answers. But what I will say is, as someone who has some audiences in the US and in the UK through the content that I do, I'm in a lot of groups and I see a lot of stuff. Now, one of the things that I see quite frequently, specifically in the UK, is US videos being shared about property or about products, specifically the home equity line of credit product. It's a primarily US product, but I have done a video about how it works in the UK. So make sure that you watch that. But the context of this video is for me to stress the point: you are not being attacked because you're Black. You're not being attacked because you're a part of a racial group. You are missing and sometimes misunderstanding or misinterpreting things when it comes to finance due to a lack of financial literacy. And I said that very carefully. It's not due to a lack of access to information. It's got nothing to do with access. It's just our ability to process information, speak to professionals, pay professionals, and not be guided by people on TikTok. I'm going to pick up on that bit about the influencers online and what the real motivation behind the videos they make is. But let's just watch this video and see what she has to say. I will comment, and there will be some comments from the original video that I got the content from.
I have a notification from my bank saying that my account went under $100. This is interesting because the night before I knew the mortgage was coming out, so I transferred a good hefty amount over what the mortgage was going to be, and I'm like, drop below $100, that's crazy. So I get online and I see that my bank has taken a double payment with like a little bit more. So my mortgage is usually $100, baby, I wish, $1,100. And when I went to go check, they had taken out $2,400. So my first thought is, this is interesting. Like maybe what they did was a double payment. Like maybe something didn't come out last month, and so like maybe that's what it was. Like maybe this is double payment and like a late fee. But that wouldn't make sense to me because it's on auto pay.
Now, I do like the fact that she, at least at the beginning of this conversation, did what we call divergent thinking. So divergent thinking is not saying it is this specific thing. It's trying to understand what the root cause might be. So what's happened is a double payment. Her mortgage payment has been doubled. That's come out of her account, which has taken her overdrawn. The premise or the framing of her conversation is that she is being she's been taken advantage of because she's Black. One of the points I want to make with this, guys, I've been a bank manager in both the US and the UK. No bank manager, no bank staff sit and sift through people's accounts to find ways to stick it to them. It's all automated. It's all algorithms. So if you go overdrawn, let's just say you have a overdraft of $500 or pounds, depending on where you're watching this, and there's an algorithm built that if you go over that amount, which is a finite amount, you will be charged. It's not a person that goes into your account and puts this charge on there. I say that because as a bank manager, quite frequently we'd have people come into the branch really emotional, really angry, ready to attack my staff because they're like, you charged me this or you charged me that. No one is charging you. It's an algorithm. It's triggered by a number. So it's your responsibility as the account holder to actually manage your account. In a lot of cases, if it is clearly something that is not characteristic of the way you manage the account, then the bank manager or the bank staff will be able to make a concession. But my grandmother always used to say, you catch more flies with honey than you do with vinegar. So when you go in telling them they're racist, attacking them, you're less likely to get the outcome that you want. So just go in, be kind, be polite. You should be that way anyway. Be open to the fact that it might be your issue and just ask them as a human being to another to review the way you've conducted your account. Show that this is not characteristic of how you conduct your account and respectfully just request that they waive the fee. 9 times out of 10, they will.
So if something happened and the funds were there, that wasn't on me. So anyway, I'm like, okay, whatever. Let me just check. So I scroll back up to see if the payment was taken out for March. Sure enough, it was taken out for March, a payment of $1,100. So I'm like, why did I get a payment of $2,400 taken out? So I call my mortgage company and I'm like, hey, what's good? I just want to make sure, like, I'm just trying to figure out what's going on. Like, why did y'all take out a payment of $2,400? And the lady's like, oh, that's your new payment. What do you mean that's my new payment? She's like, well, that's your new payment because
Property taxes, 1,000% property taxes. Your mortgage never goes up. The amount that you pay into finance a home, that is a fixed rate unless you got an adjustable rate mortgage, which is crazy if you got an adjustable rate.
All right, so for the people in the UK, it's similar to fixed rate versus variable rate. So if you're in the UK and you take out a mortgage, you'll have the option of going on a fixed rate, which the name says it all. It's fixed for a period of time. Or you can go on a variable rate. The variable rate would fluctuate. In the US, it's a similar thing. And the understanding is that most people who want to be able to manage their budget, manage their finances, what they would do is a fixed rate. But this is one of the things that when I'm explaining these things to clients, quite often they just glaze over. They don't want to have the conversation. So this is what I'm talking about, financial literacy. When you're speaking to a professional, they're explaining concepts. Don't be embarrassed if you don't understand. Ask the questions that you're clear on the implications of your choice.
Mortgage. But your actual mortgage never goes up. The amount that they're holding in escrow always goes up. Now, the reason that they would go up based off of escrow is for a couple different scenarios. One, you may have built a new house, and so the original property taxes was assessed based off of the land and not the actual house. That then increases the value of the property itself, and so that then goes up. But then your realtor never tells you, and so they just looking to actually get the property sold or get the house sold or the house built or whatever it is that you're getting from whoever it is building a home, Pulte Homes, Lennar Homes, all of those different places. And so your property taxes will be the same maybe for the first year or whatever, or before it gets built, and then it explodes. Second thing is the value of the property just explode based off of the comps that's in the area. So either way, it's going to be associated with the insurance.
So if you're in the UK or if you're in the US, he said based on the comps in the area. So one of the things that drives the value of your property is what they call comparable other properties. So how the properties are selling in that area. This is why in real estate, there's a rule of thumb. It's better to have the cheapest house in the most expensive neighborhood than the most expensive house in the cheapest neighborhood. Because if you have the least expensive house in a high net worth neighborhood, the other properties are going to bring your value up. But if you're at the top end, the other properties are kind of pulling it down. So this is why you need to, as an investor, if you're looking to invest in property or even just a residential property, consider these things. Consider the other houses in the area, how the properties are selling. He's done a really good job explaining escrow and property values. And this is what I want to point out for the people in the UK. If you're watching in the UK and you're in one of these groups where they're always stressing and complaining about how expensive it is to live in the UK, keep in mind, in the US, in some states, you pay city, state, and federal tax. Plus, anytime you buy something, you pay sales tax. Plus, you have school taxes, you have property taxes. So, taxes are a thing no matter where you are. And again, they're not designed to hold one specific set of people down. These are broad things. So, understanding finances, understanding how mortgages work, understanding how your money can work for you is key. But you don't want to get it from someone on TikTok. And I tell you why. I'll let you in on a little secret. Most online influencers, when it comes to finance, don't make their money off the thing that they're talking about. Some do. But a lot of them make money off selling courses. So it creates a financial incentive that's a little bit perverse in the sense that they want to have something sensational to tell you or some secret loophole that you can use or you can utilize. They sell the course to you for 5 grand. The content of it is usually structurally correct. I'm not saying that structurally it's not correct, but they've made their money whether you're successful or unsuccessful. If they've given you some advice that is legal but may not be wise, I did a video on that yesterday talking about leaving your spouse off your mortgage if you're in the UK to try to protect their first time buyer's discount. Make sure you check that out. But some of the advice is legal, but it may not be wise. So in the long run, you as the person that's paid $5,000 for the course, gone through the course, started flipping properties because everybody wants to flip property. When it all goes south for you, you can't really go back to that person. And always check. A lot of the people selling these courses have no license. All right, so they're not real estate. They're not real estate agents. They're not brokers. They're people that have information that is structurally correct 9 times out of 10, but won't work for everyone. But what they do is they use algorithms and keywords and technology, same technology I use, to help say, well, this is what people are searching for. These are great keywords. This is great SEO. They create videos on those topics, and then people watch those videos. And quite often, instead of doing their own due diligence, because they're being told something that they want to hear, that they can make money in property in 3 months and be a millionaire in 2 years, that's what people want to hear. So people will go along with the advice, even though they might have professionals around them or more experienced investors saying, slow down, let me help you. This bit's right, that bit's wrong. Let's do this together. People just want the quick fix. And like they say, if it sounds too good to be true, it probably is.
Insurance and the property taxes. And a lot of people really don't understand the true cost of owning, really renting from the county, but owning a home. And this is why I say it's all circumstantial. It's not all just ideal for people to just go out there and get a mortgage and all of this stuff, because your true costs are not necessarily that. When people kept selling you on the idea of generational wealth and all of this, they don't know what they're talking about. So unless you actually understand it from a business perspective,
Preach. So the idea of everybody should own a property and everyone has a human right to own a property is antiquated, first of all, but also it's not true. Not everybody is best off owning a property. And when they do the math and say, oh, well, I've seen memes with this, they'll say, well, I'm renting for X amount per month. It would be cheaper to have a mortgage. It's not just about, as he's saying here, it's not just about the monthly payment. When you're renting, especially with what's going on in the UK right now with the Renters' Right Bill, when you're renting, you have more flexibility. You don't, if a boiler breaks, if the roof falls in, you don't have to be responsible for that. You're not required by law to have building insurance. There's a lot of things that you won't be responsible for. So when you're looking at just your rent versus just the mortgage as a number, that's one thing, but there's a lot of things behind it. So if someone is telling you that the right answer for everybody to build generational wealth is to own property, they're wrong. I always say avoid always and never, because human beings have different needs, different appetites for risk, and they will have different decisions based on what their family circumstances is and what their age is.
And you're making a case by case basis decision on whether it makes sense of you to do this, then it doesn't make sense. But 9 times out of 10, I could tell you immediately that it's going to be based off of property taxes. And everybody is just waking up like, oh my God, I can't believe it. Yes, as the value of your home goes up, so does the property taxes. And often at times, they hold it in escrow. So instead of you just paying it yourself to the county separately, or instead of you getting your own private insurance or mortgage insurance, which a lot of times is PMI, where people put less than 20% down, so then they're insuring you against yourself. Basically, what's going to happen is they're going to hold it in escrow and then they're going to distribute.
So he said, unless you get those insurances, which gives me an opportunity to very quickly say, guys, when you're purchasing a property, whether it be in the US or the UK, and your mortgage broker or the finance company is talking to you about things, as he said, that will protect you against yourself sometimes, or protect you in the event that you start to lose equity in the property, don't dismiss it. Okay, consider it, have a thoughtful conversation. Insurance is not there to trip you up. Despite the common myth that people try to share with each other, or what people say as an excuse, not a reason, but as an excuse not to insure themselves, insurance is there to protect you. Now, it needs to be sold properly, it needs to be understood and explained properly, but the right insurances are going to protect you from situations like this. I found that when I talk to people about insurance and protection, they're just worried about the price. And this is just a common thing when people are purchasing a service such as protection. They only think about the price. But when something goes wrong, when they need to claim on that insurance, then all they think about is the service. Did someone pick up the call? Have I been bounced around? How quickly is someone going to come out and resolve the issue? So on the front end, when you're purchasing a property, when you're having the discussion about the insurances, they are there to protect you. Make sure you understand them. You may need a second opinion and you may need to shop around, but don't do the knee jerk reaction of, oh, it never pays out or I can't afford it, because whoever's doing your mortgage knows your finances and they'll make sure that they find a package for you that you can afford and is within your budget.
And if you have an escrow shortage, meaning that the amount that they take out is not enough, then they're going to spread it out over another 12 months. And then that will be a new mortgage payment or payment to the bank that they're also holding for the property taxes that they have to distribute, that they have to distribute out to whatever county that you subjecting yourself to. A lot of people move down to Texas, and they telling me that Texas property taxes is high. So be careful where you move. Be careful how you do your mortgage. Be careful whatever it is that you understand everything. And if you don't have somebody to help you out, then I will help you out. Make sure you tap into the Patreon. Link is in the description as well as pinned to the top of the chat. Let me hear more of what she got to say, and I want to know if I'm right or not.
You don't have enough in escrow, and your taxes went up by $6,000.
Yep. Which that then has to be spread out $6,000. So it goes up by $6,000, right? So then that has to be spread out amongst 12 months in addition to whatever it is that you was paying before.
Taxes went up by $6,000. Now, here's the part that gets crazy. So I'm like, okay,
So much for generational wealth. If you can't hold on to the property that you got to pay for, 360 payments, plus you got to pay property taxes as it escalates over the whole life of whatever it is that you own a property.
Let me check all this out. So three things happened that caused my mortgage to increase. One, she told me that we don't have any money in my escrow. I'm going to talk about that in a second. We don't have any money in our escrow. Two, my homeowner's insurance went up from $2,000 to $4,000. Called them, they were like, well, we don't know what's going on. Like, the mortgage rates are just the highest they've ever been in Texas right now. We ain't got nothing for you, basically. That's it. Like, what you gonna do? Started shopping around, all of that. The third thing, we'll talk about that again.
Well, before she goes into this and elaborates, none of these are because she's black. None of these are because there's some superior force or group of people that are sitting around waiting for her to slip up. All of these things are how mortgages and finance operate. And understanding that will allow you not to have these surprises. You'll have the right insurances. You'll make sure that you have the right conversations and the right products. And you don't buy above your budget, because this is another thing that people do. They buy well above their budget, not understanding that when these things pop up, you're going to have to come up with the money for it. Because as they say in the UK, as the mortgage disclaimer, your property could be repossessed if you don't keep up the repayments on your mortgage.
Third thing was that my property taxes went up. So I go onto the county website to see like what the heck is going on, because this doesn't make sense to me. So when I calculate everything, my insurance had only gone up $711. I remember the number because 711. So I called back. I'm like, ma'am, now this is where everything pisses me off, and there's literally nothing we can do about it. There is nothing that we can do
Why would it piss you off? This is your responsibility to understand what you're getting yourself into.
about it. We can call.
People really need to do research. Like, they really need to understand, instead of doing word of mouth, because you're going to pay for it one way or another.
To try to get.
Yep. Don't do the word of mouth. Don't do the TikTok. Don't do what I see so often in a lot of the groups that I'm in. Someone will find a viral video. And again, it's viral because of SEO, not necessarily because of the content or because the person is giving information that is correct for each individual. They'll push these viral videos out. Sometimes factually they're incorrect. Sometimes they're making stuff up. It's all about clicks and views. So before you forward out a video, and more importantly, before you follow the advice from a video, do your due diligence. Speak to a professional that you trust. They will quite often tell you something you don't want to hear. So they will tell you, no, you do have to pay off those debts that you have. You can't just go to some credit repair company and have it all written off. People don't want to hear that. So the sexy thing is to say, oh, you can write off $5,000 worth of debt. That's the sexy thing. But talking to someone like me, who's worked in debt collections for over a decade, and I'm saying, well, look, just pay it off. You did spend the money. And yes, there is a loophole where if they didn't send this specific letter in this time, yeah, those things exist. I'm not saying it's wrong. However, when you go to get your mortgage and these things are on your credit report, or they reappear on your credit report because in the dispute period it was taken off and then it reappears, it's costing you money. It's costing you tens, if not tens of thousands of dollars or pounds, because these things are on your credit report, because you wanted to dig in, because you wanted to not pay a real debt that you actually spent the money on the credit card. So don't follow what you're seeing on TikTok or on social media or in these networks or at the barbershop or at the car wash. Actually have conversations with professionals who have licenses, who are responsible for you because you are in their care when they're providing you with information, and you have someone to come back to. It's not like if it goes wrong with a TikToker or influencer that you just go on there, oh, they gave me the wrong advice, nobody cares. But with a licensed professional, you do have recourse and you can have the conversations. But usually they'll have given you the best advice for you based on your circumstances when you speak to them.
Like cheaper homeowners insurance, but for the most part, it doesn't even matter. Now, so whenever I call this lady back, I'm like, or the company back, I'm like, I don't understand what happened, because every June or July, somewhere around there, they do an escrow analysis and they see, do you have enough money in escrow? For those of you that are new to homeownership, don't own a home, don't know what it is, whatever. Escrow is an amount that you pay every single month. So at the end of the year, they pay things like your homeowner's insurance and your taxes, right? So that way it doesn't come out of pocket at any time for you.
So again, I'm going to say, people in the UK, stop complaining. Stop complaining. There's a bunch of stuff in the US. The other thing that a lot of places, and I lived in Texas, so I know this, you have homeowners association. So there's certain communities, usually the better ones, gated communities, which is they're in higher demand. You have homeowners associations. The homeowner association is like a governing body for the community. They will dictate things like how long your grass can be, what color curtains you can put up, etc. Now, it sounds a little bit like, draconian, but the good thing is it ensures that the properties in that neighborhood maintain value and increase in value, because it sets a minimum standard for how people are going to keep their houses. So you can't just have a messy lawn. There's some neighborhoods in Texas, like in Cinco Ranch area, some of the more expensive neighborhoods, that even around Christmas lights, they have things in the homeowners association guidelines of Do you put Christmas lights up? How many things like that? So obviously, I'm talking about the extreme, but I hear people complain in the UK all the time about all the different things, not understanding that in the US, depending on what state you're in, there's far more things. So these things exist. These property gurus don't always talk you through these details. They just want to sell a course. They just want to get you to watch their video and like and share and spread misinformation or wrong information, or in some cases, just lies. Sometimes it's true. But as I said, sometimes the information isn't relevant to you as an individual because it might be a US TikToker that's being spread in a UK group, and the laws are very different in the US, especially if you're in specific states.
You've already been paying all year, so they just write your taxes a check and they write your homeowners a check. Okay, you pay that within your mortgage. Now, and every July they do like an escrow analysis where they say, do you have more than enough? Do you have too little? Do you have to make something up? What's going on? Do you have a deficit or do you have excess? So they hit us up last month and they were like, yeah, you're good. Like you actually got too much. So we're going to send you a check. They sent us a check. They wrote us off a check for $2,900. Okay, cool, bet.
Yeah,
Now, for
because
those of you,
if you have a surplus, and they'll send you the difference. But that still doesn't matter because most times what'll happen is once they do a new escrow analysis, or once whatever that property value explodes and whatever the county says, that's what they start to charge. And then that's what they reach out to whoever it is that's paying it, the mortgage company or whatever. So again, ignorance of it is no excuse for it. You have to make sure that you absolutely positively understand what you're getting yourself into, especially when it comes to real estate. You will be in trouble 9 times out of 10 when people are coming on this and saying, hey man, my mortgage is exploding. No, it's not. It's your property taxes, it's your insurance. And so if you have an escrow analysis and then they determine that you got a surplus or you put too much money into it, they'll send you a refund check. 9 times out of 10, that's not going to happen because the property values are going up, not down. So, they can get mad all they want, but the only thing that you can do is sell the property.
who are like, oh, you shouldn't have spent the $2,900. That way your escrow, baby, we can pay the $2,900 right now. What we cannot pay is an additional $1,300 a month. $1,300 a month is crazy. And there's nothing we can do about it. Like, we can't go back and say, yo, y'all told us we were good. They don't give a damn. They do not care, baby. They don't care. So
it's not that they don't care. This is how mortgages operate. This is how owning a property operates. It's not a personal thing. Another thing that I find, and I get it because your house is your biggest investment, but people view it like, it's an emotional thing. Like people are dealing with you as an individual and setting specific rules for you to hold you back or to give certain people an advantage. That's not the case. The person on the end of the phone, when they hang up with you, they're talking to another person with similar or different circumstances. All they can do is go through what the policies and procedures are. There are usually, in most lending institutions or financial institutions, there is a bit of manager discretion. But when it comes to payments and how much it is and how it's calculated, that's not a matter of manager discretion. When it comes to maybe an error has been made or you've missed a payment and you've been charged a late charge, quite often the manager or the person you're speaking to does have some discretion. But as I said earlier in the video, if you come at them sideways and you're yelling and cursing and making it personal between you and them, they're less likely to do anything for you. So do your research in advance of these things. If it's definitely an error that's been made by them, give them a call, talk them through it, have your documentation. If it's an error that's been made by you, sometimes we all make mistakes. Approach them and just say, look, I got it wrong. I know it's my fault. However, look at my record. I haven't had issues in the past. Can you waive that fee? I've signed off on probably tens of thousands of fee waivers in my 30 years career. And we do it. Banks want to do it, but you have to talk to them the right way. But when it comes to something like this, it is what it is. She's got to deal with it. And, she's boohoo whining and crying and acting. And the premise, remember, the framing of her conversation was it's because she's Black. I don't think she actually believes that. I think it's a great thumbnail. It drew me in. It's a great thumbnail that will get people to watch it. But I just think this victimhood mentality does us more harm than good. When we go into situations believing these things that, real estate agents will devalue Black people's houses, I'm going to break this down. Human nature will usually override prejudice. Human nature will override a lot of things because by human nature, think about it this way. I'm a mortgage broker or I'm an estate agent. If I'm trying to sell a house, I'm trying to get as much money for that house as possible. Why? Because it drives my commission. So even if I was the most racist person, let's just say I'm the most racist person and I don't want, bald-headed people living in this particular neighborhood. Why would I care? I don't live in the neighborhood. So why would I devalue the property for the sake of not liking bald-headed people? I just want that bag, right? I just want that bag. I'm not worried about, the neighbors because I don't live there. That's not to say. So let me make it clear and you can put it in the comments. I know my US history. There was redlining. There were situations where systematically Black people were disadvantaged. Pause, end of story, new chapter. All right. Where we are now, it's all done by computers. I know a lot about AI. So before people say, well, the AI is biased too, just look at something called machine learning fairness, MLF, machine learning fairness. And it might undermine a lot of the arguments that you have around AI bias because machine learning fairness actually has some more nefarious things in there that aren't related to race. So depending on your value system, you'd probably be more worried about the top 3 things that MLF does than the whole race thing. But that's another conversation. So when you go into a situation believing that you are going to be at a disadvantage or there's a system or a person or it's just designed to hold you back and make you a victim as a bald-headed person, then that's what you're going to see. You always see what you're looking for. If you go into a situation understanding and being an adult and understanding that, not everybody has your best interest in mind, but look at the facts and understand human nature. People are going to do what's best for them. And as a mortgage broker wants to get you that house, get you that deal. A estate agent wants to sell your house for as much as possible. So they're not going to devalue it just because they see a picture of a Black person on the wall. Because as I said, they're not going to live in the house. They're not going to live in the neighborhood. They just want their commission.
They literally told us there's nothing, you just gonna have to pay this unless you have like all the thousands of dollars saved up right now to give to us in a large check. I think it was like 9,000-10,000, something like that.
Yeah, you gotta find
Then baby, you're just gonna have to pay this extra $1,300 every single month,
Nobody
and then
love
we'll do another analysis. Anyway, I'm gonna have to do a part 2 because this is too long, but I will explain what basically we're waiting for in the next thing. If you have any questions, let me know. I know I didn't want to make this too long, but yeah, this is really what we're dealing with right now, and this is how easy it is, especially for people who are one generation removed from Jim Crow. My parents grew up in the Jim Crow South. Who was going to teach them about
What?
She's about to make that conversation about access that I always dismiss, debunk. I've written a book called A Mortgage is a Really Big Loan. I have a couple of other finance books going on. It's not about access. Every single bank that I've ever worked for and that I know of has some type of financial literacy information on their website. Every organization that I know that does financial literacy, that is like a charity or whatever, is being funded. It's done in schools. It's done in colleges. It's done in the community. It's done in some churches, right? So it's not a matter of access. It's the fact that some people just want to believe that they're still in Jim Crow. Some people want to believe that there's a system that is holding them back. And therefore, they make moves and make decisions based on that like convergent thinking that it's all going to end up in the same place. There's a lot of financial literacy out there. People just need to listen, but you can't come at it from a dishonest way. So a lot of the financial literacy that's out there is how to do things correctly within the law, not operating around the sides and in the gray area, but solid within the law. Financial principles that are biblically based just talk to about how to save, how to be generous, how to not live beyond your means, because quite often that is the thing. People are living beyond their means. So she's talking about, the whole fact that she's one generation removed from Jim Crow. The other thing is, as with a lot of people that I speak to in that exact same situation, I test their actual belief in that mindset by saying, do you have life insurance? Because keep in mind, life insurance is one of the quickest ways of building wealth and generational wealth. That means when you die, you've created an insurance that it pays out. You're going to die. But a lot of the same people that complain about a lack of generational wealth and how far behind certain groups are, et cetera, et cetera, et cetera, the one quick, simple, easy, relatively inexpensive fix of life insurance and some type of estate planning, they don't want to have that conversation. And I can say that as someone that's worked in finance for over 30 years. I've worked at the top banks in the US, the top banks in the UK. I've done lending, I've done debt collection, I've done wealth management, I've done all of it. Not to say that I have all the answers, that's not what I'm saying. But what I can say consistently, some of the most vocal people about the systematic racism or the system holding them back, when you talk to them about having a will and having some type of financial planning in place, they don't want to hear it. Everyone should have a will. If you're concerned about generational wealth, you should definitely have life cover to make sure that when you pass away, property is paid off. So money is put in, either it be a trust fund or something, but boom, it's done in one generation. So her boohoo whining and crying and acting like, there's no way to remedy the thing that she sees, which I don't agree with. I don't know the lady. I'm just reacting to the video, but from the profile and things she said, I'd imagine that she might be one of those people that will say that but not have life insurance.
All right, here we go with all of the race stuff. I'm not subscribing to that part of the conversation because we live in an information age and you can literally go on the internet. They got AI. AI will break it down and summarize every single thing for you. So before you run into it, it's nobody's responsibility to teach you. It's your responsibility to educate yourself. But let me know what y'all think inside of the comments. I always like to link back to the comments.
All right, so that's my first crossover US UK video. I have a channel in the UK, I have a channel in the US. I usually keep them very separate because the content is very specific for both, but I thought this one was good, specifically for the people that watch me in the UK or people that I do mortgages for in the UK or people who are in these groups that are constantly trying to create this space of we are being held back. I'm old enough to know that there are forces and mindsets and things that exist, but I'm also old enough to see and know that people within one generation who have employed the right financial literacy and discipline and have been willing to save instead of going on vacation every 2 months, they have made themselves better. They've built generational wealth, which is protected through estate planning. It can happen. So if you are willing to do the work, if you're willing to take advice from professionals and not just people who are influencers on TikTok, you can do it too. There's nothing to stop you from being financially sound and being in a strong financial situation and ensuring that future generations are better off as well. As I always say, listen, I don't have all the answers. I can only speak through my experience. If you disagree, if you have a comment, or if you have a topic that you'd like for me to cover off, make sure you put that in the chat. More importantly, make sure you like, make sure you subscribe. There are people that watch my videos and do enjoy the content and do get value from it, even if it's just something to complain about, but they don't subscribe. As a really small channel, your subscription does mean a lot to me because it tells YouTube that people actually want to hear what I have to say. As I said, because it's a small channel, I do try to respond to all of the comments, even if they're mean. If you correct me, if I've misquoted something, I'm open to that. I'm not perfect, but I just want to stress to you guys, the information is out there. The people that can help you are out there. And sometimes the thing that you hear that is too easy or is going to make you a millionaire in a year is probably not going to do that. But the person that is selling you that course or selling you that idea is making money off your ignorance or your mindset that you are a victim. Thanks for watching. Make sure you subscribe.